Let's go into detail about Gen H and what it does.
Yeah, yeah, in a nutshell, it's really straightforward. We are an owner-occupier mortgage lender, so we lend people money to buy the house that they then want to live in. I don't think that goes remotely does us justice as to why we're here, right? Ultimately, I think I was looking the other day, there's about 120 different mortgage lenders in the UK. Does the UK need another mortgage lender? Um, yeah, on the surface, no, but you scratch even slightly on that surface, and you can absolutely see the need. So the reason we exist is, much like the rest of the developed world, we have a bit of a housing crisis here in the UK, and by which I mean we're not building enough of the right houses in the right places, and housing is increasingly unaffordable for those aged 40 and below, and obviously some above that age as well. But there's a real steep decline in home ownership below that sort of, that millennial, um, sort of millennial and below wave. It's finding it increasingly hard to get on the property ladder. Now, part of that is external cost of living pressures. I said before that we're not building enough of the right houses in the right places, so lack of supply obviously puts pressure on demand. But the assification of property, right? That you go back 30 years, people would buy a property to live in it, and
Mhm.
you'd have some very specialist people that might be landlords, but in general, it was very unlikely that your neighbor or your neighbor's neighbor was a landlord. We've gone through a period in the last, it's definitely stopped. It's not happening at the same level as it was 5 years ago, but we've had a 15, 20-year period where it's quite normal for people to own multiple properties and rent them out. Obviously, that's then taking away from the supply of people who own them. And so what we've done it gone and said, well, what can we do? Like if you want to do something to make a difference, and that's legitimately where the business started. It didn't start because we wanted to build a mortgage lender or we saw an opportunity to make some money because it's really hard to make money in mortgages. As a new entrant, it is well actually if you're going to make a difference to a housing crisis, which is a huge societal issue, follow the money. And so if you can come in and look at mortgage lending and think about what you can do, broadly speaking, 70-80% of the owner occupier mortgage in the UK are taken out by people who are employed. They're borrowing sensible amounts versus their income trajectory. And as long as they're, working one job, employed, full-time, part-time, together, as a couple or individually, actually getting a mortgage in the UK is not that bad.
Mhm.
Maybe you want to borrow a little bit more, maybe you'd like a slightly nicer, bigger house, but the system works and it works quite well. The big banks do a reasonable job, but you step outside of that bubble, and admittedly, it still is the majority of people. There's a real lack of proposition availability. So we really focus on two things. One is how would you responsibly lend more money to people so they can get on the ladder or get, instead of buying a studio flat, they can buy a one bed or a two-bedroom flat, something that's more suitable for them and where they want to live and the community they want to be part of. And we do a lot of that through family support, for example, bringing parents onto a mortgage so they don't own the property, but they're there to act as backup for their children who want to own a property. So, thinking about how you can use that sort of bank of mum and dad responsibly to allow people to borrow a little bit more than they would otherwise be able to do. And we've got a similar product that we've developed with one of the UK's leading house builders in Persimmon to help with deposit, which then helps with affordability. So it's all about dealing with that challenge where people go, well, the bank will lend me a mortgage, which is, £1,500 a month, but I've been paying £2,000 a month of rent for 2 years. Why can't I afford something bigger? So how do you do that? And a lot of that's to do with regulatory pressures, stress testing, things that are there for legitimate reasons, but are holding people back. So how do you help to overcome some of those barriers? And then the other big chunk that we deal with is complexity. So again, as I said before, if you're employed or you work employed as a couple and that's your sole source of income, the
Mhm.
high street works, Main Street, high street works really well for you. The second you look a little bit different, it gets more challenging. And so what do I mean by that? I mean people who are working they're on, they're not on full-time permanent contracts, they're contractors. So like, fixed term contracts. They might be on a 0 hours contract. So they've got no minimum number of hours they get every week, but they've got a track record of working 35 hours a week, for example. We do quite a lot where people work 3 days a week employed and do 2 days a week self-employed, side hustle. So again, the bank can lend against that 3 days really well, but looking at that customer holistically, it's just they're not set up to be able to deal with it. And then another big thing for us is sort of micro SMEs, so people who own businesses of like 1 to 5 people or work for a business of 1 to 5 people. Again, stuff that the main street lenders really struggle to process and understand, um, because we built our own tech stack from from A to Z. We're able to process those cases much more efficiently than, I would argue, than anybody else in the UK, which allows us to underwrite them, um, you know, commercially, and offer a product where others aren't. So we are genuinely creating incremental homeowners.
Yeah, fantastic. I mean, I think as you were kind of describing this, like the way you go about your maybe decisioning, your credit decisioning, the tough part may be that you may not have enough historical data on these types of situations where people are working, self-employed or SME and or some combination, and then they go to apply. You may not have like the thousands of instances of these scenarios and knowing that the default rate is X% on those. So how do you,
Yeah.
I mean, if that is the case, how do you then come up with your formula?
Yeah, no, I think that's a really good question. And I would sort of split it into two pieces. So you've got one is what is the data on that individual in terms of their credit performance and their track record, and how do they behave? How do what have they done elsewhere? And then there is what is the track record of a cohort of people who look like this and their ability to pay. So on the first piece, actually we don't do anything particularly different or sophisticated. What we do is we credit score them, we look at bureau data, we look at past performance, have they missed payments, etc. We're not doing anything that is materially different to what anybody else can do, and we're not taking a leap of faith in any way, shape, or form with that group of people. Now, there's a load of cool stuff we would like to do and like to look at in time, and we probably will. The challenge there is capital.
Mm.
Getting the capital to agree with the fact that you might say, well, look, traditionally these people don't look like the ones you would lend to, but we're confident that they're money good. That's a challenge with the capital. So I think we just need a bit more scale and confidence and ability to tell capital that actually, we're right, come with us on that journey. The
Mhm.
second piece is then looking at those actual cases and putting them in context of how others like that have performed. And I think really there's two bits to that. So one is, you know, sort of call it risk appetite or philosophy, is that we believe quite strongly that people who are buying a house to live in it want to live in it and are very much financially tied to making it work. So people want to pay that. And there's a really long way of saying people want to pay their mortgage. If it's their house and they really are living in it, even if they're borrowing at relatively high loan to value, there's still a huge amount of skin in the game in terms of that's where they live, that's where they're building their roots, the legal costs, the tax costs, the moving costs, the furniture costs. You're very much invested. So if people are making the decision to buy a house, they fully intend to pay the mortgage, and I think that's really important. That's how we start from a mentality point of view. And I don't think all. I mean, I'm sure if you ask them, they'd all say. If you ask them that directly, say, "Oh yes, of course we think like that." But I think if you see the way they behave and they act, that's not necessarily true. Um, and then the second piece is what I would call is sort of being human at scale. So we're trying to make human decisions based on the specific facts and circumstances of an individual case. And this is where I think we really diverge from the majority of other lending that happens for mortgages in the UK, and that they are very much built around well, we looked at all these cohorts, this is what the system says yes to, and everything else is a no. And they don't look, because it's, if you're using historical platforms, historical technology, it's expensive and difficult to do that consistently. But because we've got our own tech, we built everything in the last 3, 4, 5 years. It's very much built from first principle with these types of customers in mind. We are able to underwrite them more significantly more efficiently while retaining that human element. And then when you start to layer in that powerful these sort of AI agents that we're building and deploying, you can then sort of supercharge their ability to do that, both in terms of consistency of outcome and volume that you can do per underwriter, but while retaining that human feel. So it's the reason we get comfortable, the reason we've not lost a penny of anybody's money, we have minuscule amounts of mispayments and arrears in our business. And the reason is because we're making human decisions. We're looking at an individual, their specific facts and circumstances, not, you know, what a cohort of people that may or may not look like that person smashed together does. We're looking at that individual and it makes a huge difference.
Mhm. Can you give us a sense for the scale of the business currently?
Yeah, so we are very much on the smaller end of things. So we'll offer on, getting up to a billion, a billion going through the business this year.
Mhm.
We've been growing really rapidly. We've been around for 5 years. So 5 years ago, that was zero. We've grown up there. That's not as fast as we like to have grown. Um, and, hopefully we can carry that momentum. So, you know, we're offering a billion this year. Let's look. We want to complete on £1 billion plus next year if we can, and then keep that level of momentum growing. I think we've learned a lot around. It's not just the number of loans you make. It's what are the returns you're delivering to your capital providers, your funding partners.
Yeah.
Um, what makes sense for them? What is actually delivering real equity value for us, for our shareholders, real value for our capital providers, trying to work out that, really crudely, anyone can sell a £10 note for £5. That doesn't have a lot of value. So us going chasing the cheap, as much as we want our prices to be as low as possible for our customers, chasing the cheapest possible mortgage isn't really creating value. What is creating value is finding situations where there are people who are locked out of the housing market,
Yeah.
lots of them, um, and then trying, finding ways to give them access, and that delivers an appropriate return for our
Mhm.
various stakeholders. And then it comes down to, you mentioned Habito earlier, partners like Habito, and how do we get them to tell the story? Our challenge is when a customer comes into Habito and one of its advisors, that they look at a situation and go, oh, we can't help you, to change that mindset and go, actually, there's a set of products over here that have got you in mind. And whereas you may have had to wait 2, 3 years if Gen H wasn't around, you can now get onto the ladder. So we are at the beginning. The numbers are, in terms of startup mortgage lenders, we've done well. And
Yeah.
I think we probably outperform our peers, but we've got a long way to go.
So it sounds like, the way your machine works is good. You've built it well, it's working. The capital providers are there. Obviously, you have to present compelling cases, portfolios, et cetera. Seems like the constraint is on just penetrating the market, getting the word out more. How big is this market, this set of folks that lie
Huge.
outside of mainstream mortgage financing?
Um, it's billions, if not trillions. It's a very flippant answer, but it is absolutely huge. The way, you quite often get the challenge of, um, well, if you're creating these products, are you not just increasing demand, which just drives up price, which makes the problem in the long term worse? Uh, to which my response is always, we do not create the demand. Right? This is not like you're creating, a new iPhone, or you're creating a product and like creating, desire and need to own, and actually you don't. People have a need for housing. That need
Mhm.
for housing doesn't belong to the mortgage lender. It doesn't belong to the landlord. It's effectively a basic human right. Right to shelter, on a really simplistic terms. And so what we're trying to do is turn that balance such that those who want to own a house to live in it have a fair shot versus
Mhm.
a buy to let investor, or somebody trying to build a property of portfolio, or an overseas investor, or a second homeowner. How do you turn the balance so that actually the demand is going to the people who want to live in it, in their community? And home ownership rates in the UK are, much like the US, are declining, and they're declining rapidly. And it's just a huge looming problem for the younger generations. So we do need to fix it. And so that's a huge opportunity. We're not going to solve it on our own. What we really need is to see the regulatory partners come along with us, the bigger lenders, the bigger balance sheet institutions, also thinking about this, ideally working all of those, the powers that be, the party and government at that time thinking about these issues, ideally seeking our input, and the things that we think we could help to unlock that. Um, but it's I don't want to say limitless, but it's a truly huge opportunity. And as you rightly point out, the challenge is getting that message out there so that people understand they do have options. And hopefully over time we iterate, we increase the range of options that are available so that we can help more and more people into home ownership.